hot topic is always investing in property. Now, I certainly believe that investment property should be incorporated as an asset into any well-diversified portfolio. However, I find there is often a misconception of investors purely focusing on yield. Now, unless you truly need an income, there is no reason to focus purely on that, because when it comes to generating return on investment, capital appreciation over time is significantly more powerful. This is the exact same argument I made in another video in relation to dividend-paying stock versus growth stock. Now, yield on a property, one, not only is that cash coming out of that investment, i.e. it's not compounding over time, but yield actually is directly correlated to risk. What I mean when I say that, the highest yielding properties are very often very cheap. They have bad tenants, they miss payments, they trash the property, you've got high upkeep costs. Because of this risk, the investor is rewarded with higher yield. Capital appreciating properties are often in mature markets where there's huge demand, a lack of supply, and that imbalance really drives capital appreciation and price growth over the long term. You get the compounding of that, and there is a lot less risk associated with it. These are the properties that I typically recommend my clients invest in, and I do have contacts within the market that I put my clients in touch with so they can access these investments and we can build them into their portfolios.